Hey, let me ask you something. Do you ever look at your property tax bill or your state tax bill and think, wow, I can't even write most of this off on my federal taxes? That $10,000 cap we had for years have been killing people in places like California, New Jersey, New York, and even here in Hawaii. Well, here's the news. That cap just got a big bump. Not forever, but for the next few years. Better than nothing, right? So there actually is some room to breathe here. So let's just walk through it together. So I'll keep it simple, and by the end you will know exactly what changed, who benefit, and how to take advantage before the window closes. So quick background on this, you remember how it used to be, right? So if you pay $15K, $20K, even $30K in state and property tax, Uncle Sam only let you deduct $10K. So period. Doesn't matter if you actually pay way more. Now, starting in 2025, that cap jumped up to $40K. That's a big difference. That's like 4 times higher. Let's talk about this rule in plain English, explain it a bit more. So how it works. So $40,000 cap in 2025. If you file separately, that's $20K. So after 2025, that number creep up a little each year with inflation. So it's not frozen. If you make a lot of more money, the deductions start to shrink down. But here's the key. It never go below 10K. And in 2030, unless Congress change things again, we are back to the old 10K cap. Oh, so sad. By the way, if you want to see whether itemizing beats standard deduction for you, I built a calculator in my Pro Deduction SE shop. It's plug and play. I'll drop the link below. Why does this matter for you on the SALT cap, right? So let's talk an example. A family, a client of our live in New Jersey and paying $30K totally between property tax and state income tax. So before they got to deduct $10K, but now they can take the full $30K because it's below the $40K cap, right, for merit filing jointly. So that could mean $6,600 less in taxes if they are, say, in the 22% tax bracket. Or another client of ours in California, a homeowner, been paying $20K in property tax, but used to only get $10K. Now the whole $20K is back on the table for a deduction. What you can do in 2025. So you should be thinking about this year, right? So check your AGI, so your income matters, because you want to watch out phase out, because if you make too much money, then it's become phase out, right? The second thing you want to think of is timing your income. So if you got a big bonus or you are selling stock, so line it up with the years where you will get the biggest deduction. So property tax, so don't assume you can just prepay your next year bill. The say it's only count if you county actually assess the tax. Mortgage interest and SALT, right? So with the bigger SALT cap, combine it with mortgage interest, can finally make itemizing worth it again. If this is making sense so far, hit like, or more people, more folks in high state tax can see this, and drop your state in the comment. I would love to know where this hit the hardest. Also, you want to think ahead, right? So for what you can do between 2026 to 2029. So here where the planning gets fun. So the cap go up a little each year with inflation. So every year between now and 2029, you can squeeze out a bit more. Then in 2030, boom, it dropped back to the 10K cap. So during this window, you can bunch your deduction, line up property taxes, charitable donation, and big expenses. On the you can use even on the entity level workarounds. If your state allow pass-through entity tax like the PET, so you can combine those with the higher SALT cap. And say, what if you are merit filing separately? Sometimes 20K each works better. Sometimes it's not. You want to run the number to compare, and you get to decide, right? Even though if you don't like your spouse or You want to file separately, but if it's saving you money, why not, right? And then don't forget the rental property taxes are still deductible on Schedule E no matter what, because if it's for rental or for business, it's deductible. So if you have home office for your Schedule E or your Schedule C, that's apply, right? Because those are not limited by the SALT cap. The SALT cap is only for Schedule A for your itemized deduction. So if you are a landlord, check out my QBI Safe Harbor Tracker Info Deduction Shop. That's one help you qualify for the 20% business deduction, and it's paired really nicely with the SALT change. So now let's talk about future planning. What's going to happen after 2029? What you can do about it? So this bump in the SALT limit is not forever right now. It is scheduled to be back down to 10K in 2030. So that means this next 5-year stretch is your opportunity to, you can still appreciate investment if you were holding up. You can stack up deduction in the high cap years, and you can knock out big ticket property tax payment where you can actually use them. Also, you want to watch out for the traps. A couple of easy mistakes that I want you to avoid. First, don't prepay unless your county has assessed the tax, otherwise it won't count. Second, don't forget the standard deduction is higher too. So for a couple in 2025, you're looking at $31,500. Sometimes that's still better compared to itemized deduction. Third, don't wait until 2029 to plan. By then it's too late to spread the thing out. So plan now while you're still in the beginning of 2025. If you want a multi-year strategy, not just SALT, but retirement, QBI, estate planning, check out accessy.com. That's where we go deeper. So what's the bottom line? So the big beautiful tax bill raised the SALT cap from 10K to 40K, adjusted for inflation from 2025 to 2029. So that's the gift if you are in a high tax state, but it's temporary. So use these years wisely. You want to plan ahead. You want to lock in the savings where you can. And as always, this video is for the education only, not tax, legal, or financial advice. So talk to a pro about your situation. If this helped, hit the subscribe button, share it with someone who's drowning in property taxes, and check the link below for a calculator and workshop. I'm Mia. Thanks for hanging out with me, and I will see you in the next beautiful tax bill update. Aloha!